Hello everyone, thanks for joining us today and welcome to this presentation on where to find trending trade setups. Welcome, my name is Stven Primo, the president and founder of Specialist Trading, and I see a lot of new and familiar faces as well today, but for those of you who aren't familiar with Specialist Trading, we are first and foremost an educational company. You see, it's my goal to teach you all the tips and techniques that I've accumulated in my nearly 40 years of trading so that ultimately you can empower yourself with this information and make your own trading decisions. I really feel after trading for so long that the reason why upwards of 80% of all traders fail is because basically you're giving your power away. You're relying on someone or something to tell you what to do, how to trade, what market to trade, what the perfect time frame is. And so what we do at Specialist Trading is we mentor you and teach you right alongside with you so that you'll be able to decide those things for yourself. We give you the tips and techniques and the methods, but ultimately we want you to be in charge of your own trading. Now I say this because I've been trading roughly 39 years. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of them I was a specialist. A specialist simply means it's a person who made markets in roughly about 50 stocks. So I made markets during the crash of 1987 and also the bull market that followed. I left the floor in the mid to late 90s to manage money, to pursue my own trading. And around 7 or 8 years ago, I teamed up with Pro Trader Strategies and I began Specialist Trading. So that's what you see in front of you. We are first and foremost an educational company, and you'll see today how much attention and detail I give to educating because I'm going to share with you a great technique. It's simply an entry technique. It's not a full-fledged strategy, but a great entry technique for trading trending markets. So get out your pencils and paper and get ready to follow along. But one thing before we begin, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of great performance results using this entry technique, but remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a quick moment to view that, I would also like to take this time to invite each and every one of you to follow us on Twitter if you haven't done so already. I post free information on a daily basis there, anywhere from daily financial wisdom to actual signals that our strategies have generated. In fact, for all you Forex traders out there, I posted a signal that one of our strategies generated to go short the British pound. And I believe that's already in just a couple of days generated close to 200 pips. So it was a sell signal on the British pound, and every once in a while I will post some information such as our strategy signals that have been generated through our strategies. But Twitter is rather limited, and you can't get really too much detailed information. So if you're more interested in detailed information, videos, and learning tools, Pro Trader Strategies, my sister site, has put together a Facebook page for us. So simply log on to Facebook, go to protraderstrategies.com, and like us there as well. There's a lot of great free information there as well to find out what we do and to what we're all about at Specialist Trading as well as Pro Trader Strategies. Okay, now I want to start off by sharing with you what I learned on the trading floor of the stock exchange, because as I stated, I was on the floor for a total of 16 years, and I've made no secret about this, but my first year or two, I struggled tremendously. In fact, I couldn't make a dime. I was probably doing the same things that many of you started out trading, and it's all conventional wisdom, the things that we were taught that are supposed to work, and there was no consistency at all in them. So I was really struggling tremendously, and I didn't think I was going to be on the floor much longer. And what my mentors told me was basically trading 101. This is something we've all heard, we all know, and they just basically said, you will increase your odds for success by trading in sync with the trend. Now, I know everyone knows this. As I state here right now, it's trading 101, probably the first thing everyone learns. But if this is true, then why do upwards of 80% of all traders fail? I think it's because everyone has a different idea of how to find out what the trend is. And most of the time, when we find out what the trend is, either through indicators or through some convoluted logic or through patterns or through what someone is telling us in a chat room, by the time we get into the trend, it's often too late. So I'm going to show you what I feel is the best way for finding the trend, and then I'm going to share with you an entry technique that you can start applying as early as today if you like, okay? Now before we begin, as I always do, I love to take your questions, but please, for those people who are new to our presentations, please hold off on any questions to the very end, okay? That way the presentation seems to move a lot quicker, and oftentimes if you wait for the next slide, your question will be answered, okay? So if you have any technical difficulties, don't worry, we are recording this, so if your sound is going in and out or the picture is going in and out, I think everyone responded that they were seeing and hearing everything okay. Or if you just have a question, kindly wait till the end and we'll answer everything. But this is being recorded, so if you have to leave early or something, you can request through Pro Trader Strategies a link to this recording, and they'll send it to you this afternoon, okay? All right, so why don't we begin? Now, does this look familiar to anybody? Let's say you see something such as this, HRB. This is an older chart, and we'll show you some older charts in the beginning. These are for educational purposes, but then we'll go into things that are as recent as today, okay? But let's say you see this chart and you say, okay, well, HRB is going up, but I'm really not convinced we're in an uptrend yet. I'm kind of, scared to jump on in. But then you wait, and lo and behold, you're making higher highs and higher lows. So you figure, okay, we're in an uptrend, I'm going to jump in and buy this, probably just making some type of a pullback or high-level consolidation before we go up even higher. So you jump in and buy based off some guy in a chat room or trading room, and then look what happens, okay? Does this look familiar to anybody? Or it doesn't have to be in stocks, it can be in currency pairs. How about the Canadian dollar? Now, right here, looking at this older chart, the Canadian dollar is falling out of bed. One would say, well, it isn't a downtrend, but it's only, maybe a week of action or so. Let's give it a little bit more time to tell us if we really are in a downtrend. So you hold off a couple of more weeks, maybe 3-4 weeks, and it continues to go lower, lower lows, lower highs. So you feel, it's okay to jump in the water and to actually sell. After all, you like to trade support and resistance. This looked like good support. We've broken it. Everything you've taught, or maybe you have a software program that says the volume has shown that the support has been broken or the Fibonacci levels. So it's time to sell. So you go in there and you sell, and then look what happens, straight up, okay? Once again, it doesn't have to be stocks or the currency pairs, could also be E-mini futures. Let's look at a range bar, a 1-point range bar on the E-mini futures. This is just this last month. As we see here, it looks like it's going up, but you're a little wary, maybe you're getting in too soon. You don't want to buy at the top, so you want to give it a little bit more time. So we wait, and actually looks like we're forming some type of high-level consolidation, even a flag or a pennant. And it looks like we're just about ready to break out of this resistance, okay? Those all you support resistance traders. Let's say somebody in the chat room says, if we break out here, you've got to buy, and it looks like we're going to break out. So you're all excited. You jump in and buy, and look what happens, okay? Does this look familiar to anybody? Now, this is the way I used to trade when I first started trading. I would usually get in a day late and $1 short. Most of the time, I was trying to be in sync with the trend. So I wasn't trying to pick tops or bottoms after I learned the lesson of being in sync with the trend. It was just a little bit too late. I would often get in the trend once it had been established, and then I was in for just a little bit and then would stop and reverse. So this leads us to ask the question, what we need now is an early trend detector. How can we find what the trend is early in its stages? We don't want to get in too late, because that's really where we'll have the bulk of consistency if we can get in right off the bat when a trend has been just started to become established. So the best way I know to find the trend, you've heard me speak about this countless times, is the PET-D. This was a tool I was introduced to over 30 years ago on the floor of the exchange. It is, in my opinion, the best trend detector that I've ever been associated with. Better than any indicator, better than any pattern, better than any guy on TV telling me what the trend is. And remember, the PET-D is not a strategy. It's not a system. It's just designed to tell you what the market is doing. Basically, the PET-D is a translator. All right, the market is often telling us what it wants to do, but for some reason, we're always told, well, we have to listen to some guy in a trading room, or we have to listen to a ton of indicators, because that's what tells us what the market is doing, or we have to listen to news. But in actuality, what I've learned in nearly 40 years is the market tells you often in advance what it wants to do, but we don't listen to it. We've been taught to listen to other things. So what the PET-D does is it's a translator. It translates what the market wants to do so that we can figure out what side of the market to be on. It's a proprietary color bar algorithm. It's so simple. All you have to do is follow either a series of green bars to tell you that the trend is up, or a series of red bars to tell you that the trend is down. That's how simple it is. There's nothing you have to figure out, no logic you have to put together, no patterns you have to look at, no news you have to try and make sense of. Just follow the bars, okay? But remember, I think where people have difficulty with the pet D is they think it's a strategy. They think as, well, Steve, where should I get in? Where do I get out? The pet D is just telling you the direction. The reason why I think, if you've ever gone to the chat rooms or the blogs, so many people I've read a couple of times where people think they figured out the pet D, they have it all figured out. And I can honestly say not one of the blogs or things I've read about is correct in figuring out what the formula is for the pet D. But you know what? It really doesn't matter. It wouldn't matter if the whole world knew this proprietary formula. What really matters is knowing how to implement it correctly. And this is what I do with my nearly 40 years of mentoring with my students. I tell them how to use it correctly, because I could give anyone the formula to this, and once they figure out how to apply it to their charts, I would say almost guarantee that most of traders would lose money because they wouldn't know how to implement it. So it's not so much about discovering, trying to figure out what it's based off of. It's based off of momentum, I'll tell you that. But we want to keep it in-house proprietary because there are institutions, there are hedge funds that are interested in purchasing this. So we just want to keep it proprietary as of right now. But our main goal is to teach you how to use it correctly. That's the real secret. The real secret is not the formula. The secret is in how you apply it to your trading. So this is what I'm going to share with you today. Now, let's look at that older example we had here with HRB. Remember, we got in right at the top and then we got stopped out with a loss. What if we could have known, though, that we were in an uptrend way back here? You know, everyone says it's easy to see in hindsight that there was an uptrend for a short time, and it's easy to see in hindsight that we fell out of bed. But what if we had known that we were in an uptrend back here? And what if we had known to get out somewhere around here? Well, all we have to do is apply the pet D. And now the pet D changes the colors. And way back here, we had consecutive green bars telling us that we're in an uptrend. So you could have taken advantage using any strategy, any system, any technique you like, and been long the entire time. Even on the days it was down, we closed lower, the pet D continued to color the bar green. All right, up until this point where you had 3 or 4, 5 consecutive red bars. That was the market screaming that it's going lower. So the pet D simply translated it for you and transferred that onto a red bar. So now you know that the trend is changing, and you could have had ample time to get out of your long position and miss all of this downward move. And if you're a more aggressive trader, well, sure, you could have gotten short and taken advantage of that as well. If we look at that older chart in the Canadian dollar, we were going straight down. It looked like we broke this support here. We got short, and then we got stopped out with a large run up to the upside. How could we have known to get short somewhere up here and then to cover our short and go long? You just add the pet D, okay? A pet D knew well in advance that we were already red. It was in a downtrend way up here. So you would have known not to buy anything and to only be short. And sure, you're never going to pick the top or bottom in anything. That's really a gambler mentality. But what we're trying to do is just get those high levels of consistency. And the way you do it is by simply switching with the trend. Once we had 2 or 3 consecutive green bars, we know now that we're going higher. And then lastly, we can go to the 1 point range bar in the E-mini. Okay, we thought we were going to go long here on this breakout to the upside, and then look what happened. It quickly reversed. How could we have known that we were going to be in an uptrend back here? You add the pet D, and the bars were green the entire way up, all the way back here, giving you ample warning to get out at these levels and go short if you like. So see, this is the beauty of the pet D. It is simply translating what the market is trying to tell us, but we just don't know how to do it because we've always been trained, well, I've got to listen to this guru on a webinar. I've got to listen to this great indicator that I spent thousands of dollars for, or this great program that cost me $5,000 that tells me where to buy and where to sell. Remember, as I said in the opening statement, the reason why most traders fail is because you're giving your power away. You're letting someone or something else tell you what to do, how to trade, what time frame, what the perfect market is. We just want to furnish you with the tool so that you can decide for yourself. All right, the pet D is just a tool that tells you what the market wants to do. It's up to you to decide how you want to trade with it, and we show you how to do that in our courses. Now, as I stated, the beauty of the PAT-D is that it tells you which direction you should be trading. So therefore, once you know the direction, you can apply any technique, any strategy, or any system to that trading. Now, I want to share with you a trading technique today, so you'll see how simple it is to find those really nice trending setups once you apply this with the PAT-D. Remember, everyone has trouble trading with the trend because we don't have a good idea of what the trend is, and most of the time we get in too late. Now that we have the accessibility with the PAT-D, we know what the trend is, and we just have to apply certain techniques that have a higher level of consistency to them. So here's the technique I'm going to share with you today. Many of you, I'm sure, have probably heard of this before. Its requirements you need are simply the PAT-D and an inside day bar pattern. Okay, now if you're not familiar with what an inside day bar pattern is, it's a 2-bar pattern. Here's the standard definition. Inside days are days where the chart bar has a lower high and a higher low than that of the previous day. Now I know that may seem a little wordy and confusing, but let's just look at an example here. The inside day is a 2-bar pattern. Now I know we call it an inside day, but this could be a 5-minute bar chart, it could be a weekly bar chart, a monthly, or even a tick chart. It doesn't matter. An inside day just simply means 2 bars of whatever time frame you choose. Bar number 1 has a range from top to bottom, and bar number 2's range is usually inside that, meaning the high is usually lower than the high of the previous day, and the low is usually higher than the low of the previous day. So its range is inside. Now, we're going to stretch that a little bit. That's the standard conventional definition of it. We're going to, just give us a little bit more room that an inside day can be also equal to the high of the previous day's high and the low. So you can have a range where it's exact same range at the previous day. As long as it does not exceed the previous day's high and the previous day's low, it can be categorized as an inside day for all intents and purposes, okay? So, as you see here, the standard definition, a lower high and a higher low. Its range, bar number 2's range, is inside bar number 1's range. So, here's how we're going to apply it with the PAT-D. We're going to look for both bars of an inside day pattern to be colored green. All right, this is your sign and your signal that quick upward momentum may continue. Okay, this is just an entry technique. We're not going to be talking about exit points, stop placement. We're just going to show you how well this technique works, and we're going to apply it with the PAT-D. So this is what we're looking for. We want to see that both bars are green. If one is green and one is black, that's not good enough. We have to make sure that they are both green, because if they are, it's telling us that they are in sync with the PAT-D. Okay? Remember, we're going to go through a lot of examples. Some people may have joined us a little late, but please remember that we are only going to be taking questions at the end. So if you want to ask a question, I'm not even going to open up the question and answer box till the end of the presentation. So just hold off on any questions, okay? All right, now conversely, let's say we want to go short. Well, we're going to look for both bars of an inside day pattern to be colored red. This is your signal that quick downward momentum may continue. So this is what we're looking for. Now, it doesn't matter if the bars previous to that were green. It does not matter. All that matters is that this 2-bar pattern is either green or red. That tells us that we are in sync with the trend, and it tells us that we're most likely going to continue with some quick momentum in that same direction. Remember, green is for uptrends, red is for downtrends. All right, so let's look at some stock examples to show you how well this technique works when applied with the PAT-D. Okay, here's a chart in GPC coming into February. Obviously, we're in a downtrend, right? But how would we know that we're actually in a downtrend? And how would we know when to get out when it quickly turns and goes into an uptrend coming into this last week in February? Okay, well, let's apply the PAT-D. As we see, the PAT-D was red way up here at higher prices, turned red, and then slowly started to turn green. So you see how we had advance warning when the trend was going to change, and you see how we were able to exit any shorts when we had a confluence of green bars. But how could we take advantage of this? Well, inside bars right here, inside bars right here. So once you had this, you could have sold. Look at the downward movement. Here you could have sold some quick downward movement for the day, but not a lot. That's okay. It's up to you to decide how long and how far you want to stay in these setups. But then once the trend changed, guess what? 3 more setups to the upside, okay? Now that we're all green. You see how simple this is? We're not listening to any news. We're not looking at any, volume. We're not looking at tons of indicators. We're just checking out the color of the bars and then applying this simple 2-bar pattern. Now let's look at AKAM coming into February. As you see here, this was the first or second week of February. Obviously, someone in hindsight would say, well, Steve, this is not hard to see we're in a downtrend. I mean, why do I need to have the PET D? It's easy to see that we're in a downtrend. Well, that's true. In hindsight, it is easy to see. But wouldn't you have liked to have known way up here at these higher levels, say around 60, 62, that we were in a downtrend, that we were going to continue? Sure. All you have to do is apply the PET D. And the entire time we were up here at these higher levels, the PET D was red. So what is this telling us? It's telling us that we were in, it was screaming to us that we're in a downtrend. Do not buy AKAM. In fact, you should be looking for this 2-bar pattern. Had you taken the very first one, well, that's 20 points in 2 months to the downside. And look at all the opportunities you had to use this simple inside day pattern. See, the market is always giving us opportunities to jump on board. It's just like a river. It's going in one direction, it's going with the current in one direction. For some reason, as traders, we've always been taught to swim in the opposite direction, to swim upstream, which is really silly. All you want to do is find out the direction of the river and then jump on board with a boat and go in that direction. This is what the PET D does. It tells you what the direction of the river is, and then with these techniques we share with you in our courses, we show you how to get on board. How about KORS? Okay, as we see here, we have the bars red, and this was the end of a downward move, and we had a 2-bar inside day pattern. Now the stock went down a couple of points after that, but really not a lot. And so let's say you had gotten in and out quickly. You could have gotten out with a quick point or two. But let's say you had stayed in. Well, it looks like you're losing right now. And now the bars are starting to turn green, okay? Instead of a confluence of red bars, they're now mostly green at this point right here. And what do we have right here? We have an inside day with 2 bars being green. So if we were still in the trade, we would have stopped ourselves out and switched and reversed for a small loss, maybe a point or so, but that's okay. You would have made it quickly back by gaining 15 points in 4 days. Now, obviously, some news happened which caused the stock to gap up 10 or 12 points, but we didn't know that. We weren't alerted by the company, 4 days in advance to go long. The PET D was telling us that it's going higher by being green, and the inside day pattern was our vehicle for jumping on board to the long side. And that was 15 points in 4 days. So sure, you would have had a point or two loss, but you could have quickly made it back. That's the resiliency of these techniques. Okay, how about Monster, MNST? As we can see here in hindsight, once again, sure, we're in a downtrend, all right? But you could have taken advantage of that downtrend right here in this inside day pattern. And had you gone short here, that's 20 points in your favor in the next 2 weeks. Once again, we're not saying that all of our students maximized each and every setup and got out at the exact top or bottom. We're just saying that's how much you had to work with. In 2 weeks, you had 20 points in your favor. We're offering you these techniques, and look at what the market has given you after you could have implemented this technique. Now, here's one thing I want to share with you, because this is what a lot of people do. And even though we don't tell you not to trade this way, it's not in any way required at Specialist Trading to do this. A lot of people use this particular technique where they use a higher time frame to tell them what to do in a lower time frame. Now, I don't particularly use it. That's why we don't teach it in the course. In fact, in my nearly 40 years of trading, I have found no consistency in using that. In fact, it has, in all actuality, kept me out of a lot of good trades waiting for different time frames to line up. So I don't use it at all. I only trade the chart I'm looking at. Here's a perfect example. This is the daily chart of Monster, MNST. Okay, now you could have taken this trade here and had 20 points in your favor. As we look at these last couple of days, the 11th and the 12th, this was Thursday and Friday of last week, we started to notice that the bars were going up. Okay, in fact, we had a nice little bounce or rally. Let's say you wanted to go down to a smaller time frame. Here's a daily chart. Now we go down to a 15-minute chart of the same time. Here's the 11th. As you can see right here, here's the 12th. Okay, now this is the rally on a smaller time frame. Now, if you had waited for that larger time frame to turn green with the PET D, you would have missed out on having all these bars green, and you would have missed out on having the ability to generate 5 points in 2 days. Okay, remember, this is a 15-minute time frame of the same stock right here, and all the bars are green. If we go back to a daily chart, I've just kind of backtrack here, these are the same exact 2 days, and they were red. So that's why, it's up to you. You can, we don't tell traders how to trade. That goes against our philosophy. We just give you the tools to make your own decisions. But it is in no way suggested or, taught to our students that you should wait for the two time frames to line up. It doesn't make sense to me. I've never seen any consistency in that. And as I just stated, the only thing it does is keeps you out of some good trades. So if you want to be on a smaller time frame, by all means, just trade the chart you're looking at. Don't wait for a higher time frame to confirm it or vice versa, because most of the time you'll just get out of a lot of really nice trades. I know we're all taught, any webinar you go to, you can hear these guys saying, well, okay, we're in a downtrend on the daily chart, so that means the hourly chart should also be in a downtrend. I don't teach that. In fact, once again, that only keeps me out of a lot of good trades. Our philosophy is only trade the chart you're looking at, and that's it. Now, a lot of people always say, well, Steve, this is all great, but if some news event comes out, okay, this all goes out the window, right? Well, I'm not going to sit here and tell you that it's 100% guaranteed that every setup works. That would be silly. And if I did say that, I would suggest you run away, because, I would never say that, because I don't believe in that. Consistency in trading means 2 steps forward, 1 step back. So you're going to have some small losses every once in a while. But I just want to show you, if you are frightened of how trading in front of news can be, let me just show you a couple of examples here. This all came out in the middle of October of last year. I'm sure a lot of you are aware of Weight Watchers. The stock doubled after Oprah announced that she was getting in as being an investor in the company. Okay, so she decided to buy a 10% stake in Weight Watchers. And let's see what happened. Okay, if we look at the chart, we see here that the stock was basically doing nothing. It was kind of flatlining, just going sideways at around $6 or $7, and then gapped up tremendously on that news. And it continued to go higher. But once that news came out, I'm sure a lot of people, seeing that the stock was roughly at 6 or 7, and then it immediately went up to 16. I'm sure a lot of people didn't want to buy there because it was like, a little bit too high. So they probably stayed out of the entire time. This probably was a lot of people short covering or just, trying not to miss the boat. Now, I'm sure a lot of people are saying, well, Steve, how can the PET D help us in situations like this? Well, let's apply the PET D. This is a weekly chart of Weight Watchers. And if we go back all the way to August, we see that the majority of bars were green. So this entire time, the PET D was translating what Weight Watchers stock wanted to do on a weekly basis. And just except for one red bar, all the bars were green, telling us that we were in an uptrend. So that entire time, you knew you should not be short. Now, we didn't know any news was going to come out, but what about the 2-bar pattern we showed you? Guess what? Right here, right here, right here. So see, even when news comes out, the market, as I said in the very beginning of this presentation, the market, most of the time, I would say upwards of 80 to 90%, is always telling you in advance what it wants to do. But for some reason, we've been taught to listen to news. We've been taught to listen to chat rooms. We've been taught to listen to these gurus on TV or in webinars, and that's where we take our cue from, all right? We should only be taking our cue from one source, and that's the chart in front of us. Now, the chart in front of us, by using our translator, the PET D, and by using the simple 2-bar technique, was screaming months in advance to buy WTW, Weight Watchers, on a weekly basis. And so you could have made, basically, had you taken this very last signal here, basically 20 points in just 1 week. Now, if you were more inclined to wait after that, okay, well, guess what? The market was screaming, here's another setup. Here's another inside 2-bar pattern. So you could have taken advantage of that as well. Now, I want to show you this. This is an older chart in the industrials. Okay, now in August of this year, the market fell out of bed. The market really dropped. In fact, one day during the course of the market, the Dow was down over 1,000 points. People were saying, boy, this is just terrible. There's no way the small investor like me can really make money in markets like this, because they're all being taken over by these hedge funds and by these large institutions. And me, the small guy with little money, I can't compete with that. In fact, I can't compete with all these high-speed computer, high-frequency trading systems. So it's just not, it's just not fair. Okay. All right. If there's one thing we say at Specialist Trading and Pro Trader Strategies, it's to never think that way, because that basically is, once again, saying, I never know what to do. I always wait for someone or something to tell me what to do. So you're basically saying, I have no idea what to do. What we try and teach you is what to do so that you can be in charge of your own trading. And let's go back to August when the market fell out of bed. As we see here, we were kind of in a sideways to lower market, but really not enough information to tell us what the direction is if we just looked at this. But if we apply our translator, the PET D, well, the PET D has been telling us ever since July that we're in a downtrend on this daily time frame of the industrial average. So we knew this entire time, even though we were kind of slowly drifting lower, this is a downtrend. Until we get consecutive 3 to 5 green bars, we're in a downtrend. So there's no reason we should be looking to go long. So right off the bat, you would not have lost any money when the market fell out of bed. There's no way you would have, because you knew we were in a downtrend. You never buy in a downtrend. Now, on top of that, we had our 2-bar technique. And as early as July, the market was giving us signs and giving us chances to get in. So see, you never have to play that victim role. In fact, I strongly, try to teach all of my students, never say, boy, I can't do anything. These big guys have all control, because they don't. You have just as much control as they do. Everyone gets the same amount of hours to trade the market. Everyone looks at the same charts and can discern the same information. The only reason is we're taught faulty information that doesn't make any sense. But once you use the PET D and simple tools to get you in, you can take advantage of moves like this. Now, the Dow fell 2,000 points in 2 weeks. I don't want to hear any of my students ever saying, boy, there's no way I can compete with these big guys, or what's going on in China, or these high frequency systems. That's silly. Everyone has the same information. You can still use it. Just by applying the PET D, you know what side of the market to be on. Now, that was in August, okay? Let's go back to December. Now here, once again, it looks like the market is just kind of going sideways to just basically in a range market where most people are scared. They say, well, this stuff doesn't work in a range market. We're going low, we're going back up, we're going lower. Well, let's apply the PET D. This was on the 10th of December. And just but one bar, all the bars were red, okay? Now, this is a candlestick where we had an up day, but the outline is red. So that's telling us the PET D is calling it red. So there's no reason to be long. We should be looking for short setups, short trending setups. And guess what? The market falls out of bed, 300 points in 1 day. But what did we have here? We had an inside day bar, okay, right here, this 2-bar pattern. So the market was giving us a clue well in advance to go short. How about gold? Once again, another example. Those last couple of weeks, I've heard so many people play the victim attitude, saying, boy, I wish I would have known gold was going up. There's no way I could have found out. I mean, it just screamed up really quickly. And man, I really missed that trade. I really wish I would have known, but who knew that gold was going to take off like that? Well, if you had the PET D, you would have known. Here's a chart, a daily chart of the gold futures we see here. Now, this is at the very beginning of the year, as you see in the beginning of 2016, all right? Now, if we add the PET D, we see here that the majority of bars were red, but at the very beginning of the year, we started to turn majority green. In fact, we only had one red bar. So as early as the first couple of weeks of January, you knew that you should only be looking to go long gold. So don't tell me that you had no idea. The PET D was screaming, you should be long gold, okay? Now, if we add the simple technique I'm teaching you today, well, right there, the very first 2 trading days of the year gave you an inside bar pattern, a 2-day inside day bar pattern. So that was your buy signal at the very beginning of the year. And then we all know what happened. And all along the way, there have been more and more setups that you could have taken advantage of. They're all this 2-bar pattern, the inside day bar pattern. So even if you miss one, the market always gives us second chances. As long as it's in a trend, it gives you more and more chances to get in. All right, so we've looked at stocks, we've looked at commodities. Let's look at E-mini now, okay? And let's go back now to the very beginning of the year once again, the beginning of 2016, as you see here in the lower left-hand corner. Coming into the beginning of the year, well before the market sold off, the E-mini future on a daily basis was coloring all the bars red. So we knew we were in a downtrend. Everyone was so surprised at the beginning of the year how terrible the market was. Well, look at coming into the beginning of the year, we had 3 consecutive red bars here in the E-mini future, which is the representation of the S&P 500. So we already knew we were going lower. Once we're going lower, look for the 2-bar pattern. Okay, had you taken this very first one, that's 200 points in just 2 weeks. Okay, now 200 points per contract comes out to $10,000 per E-mini future contract. And once again, I'm not saying you would have stayed in that entire time and gotten out with a $10,000 gain, but we're just showing you how once you're in sync with the trend, as notified through the Pat D, and once you use our simple techniques we teach you about entering the trend, that it's easy to be consistent. Okay. Here's a 30-minute chart of the E-mini S&P. This was on the 12th, which was just last Friday, last week, not even a week ago. All right, as you see here in the lower left-hand corner. Now, we knew as early as the first hour that we were going to be in an uptrend, well before the market took off. Why? Because the Pet D was coloring the bars green. In fact, the first 3 bars, the hour and a half, we had 3 consecutive green bars, telling us there's no way we should be short this market, okay, until we get a confluence of red bars. So once we know that, then what's our cue? We just look for that 2-bar pattern, which was right here in the very first hour and a half. And had you just taken that very first setup, well, look at all the gains you would have had. But there was another one right here, then another one right here. That's 15 points in one day. That's $750 per contract. Now that was on the 12th. If we look here on a smaller time frame, on a 15-minute time frame, and this is on the 12th and the 16th being Tuesday or yesterday. This is on a 15-minute time frame. Obviously, in hindsight, we're in an uptrend. But how do we know we're going to be in an uptrend? You apply the Pat D. You see how easy it is to be in sync with the market once you apply the Pat D. And remember, it's not about the formula or figuring it out. It's about knowing how to apply setups with the Pat D. Okay, it's not so, the formula is inconsequential. What is important is having someone who's used this for over 35 years mentor you in the correct way in which to implement it. So here's just one technique I'm sharing with you today. We have many more, many others. And had you taken these setups down here on the 12th, which was Friday, well, that's 40 points in just 2 days. That's $2,000 per contract. Let's bring it even more closer, more recent. Let's talk about today. I took this snapshot today before we began today's presentation, and I didn't have the full day, but I just got the first couple of hours. This is on a 10-minute chart. Okay, as you see here, this is on the 17th. Now, obviously, we gapped up, and we had 30 minutes of just basically going sideways. A lot of people, a lot of traders I heard of people saying, well, we've gapped up. It looks like we're going to top out and come back and fill this gap. You hear that all the time. Gaps are meant to be filled. So when you gap up that strongly, you've got to sell, especially here with this down bar here, because we're most likely going to come back, fill the gap, and then we can go back up. Well, let's see what the Pet D was telling us. And the Pet D, once again, is just the translator, because the market is actually telling us what it wants to do. The Pet D just translates it into a color bar. So once we applied the Pet D, now the Pet D says the market still wants to go up. So we didn't sell anything. There's no reason you should sell if the bars are green. And lo and behold, what do we have here? We have a 2-bar pattern, okay? That's our inside day. So this was this morning in the very first hour, hour and a half of the day. So you could have gone long this morning, and look what happened. 10 points in just 1 hour. That's $500 per contract, okay? Just taking that one setup, okay? And I had to end it here because this was roughly 8 o'clock Pacific time, just a couple of hours before today's presentation. But had you just wanted to trade the first 2 or 3 hours of the day, well, that's $500 in your favor, just off this simple pattern as applied with the Pet D. Okay, that was this morning. Now, lastly, let's look at the Forex market for all you currency pair traders. The same technique applies. We can still use the same Pet D setup, but it doesn't matter what time frame. And here's a monthly chart of the Canadian dollar coming into this year. All right, obviously, in hindsight, excuse me, we're in an uptrend. Easy to see that you should be long looking back in time. But what if we're at this point right here, going all the way back to 2013? Remember, this is a monthly chart. Wouldn't you have liked to know back here that you should be buying? Well, let's add the Pet D. The Pet D has been green the entire time. Okay? There's no reason you should ever be selling the Canadian dollar on a monthly time frame coming into 2016. And it wouldn't matter if we're trading stocks, the futures markets or the currency pairs, because we can apply that same two-bar pattern. Now, you just applied this two-bar pattern, this inside bar pattern right here, back in March of 2013. That's 4,000 pips in your favor coming into this year. That's $40,000 roughly per contract. Once again, no one in the world probably held that on using this technique, one of our students, but this is how much room you had in your favor. That's all we're trying to share with you. Now, that's a monthly chart. Let's go down to a 30-minute chart. This is a very recent chart. In fact, this went up to Monday of this week in the British pound. Here's a 30-minute chart. Now, starting out this day on the 14th, which was, I believe, Sunday, because the forex markets opened Sunday evening. This was Sunday evening coming into Monday morning. Okay, as you can see, the bars were all green, and then they quickly turned red. And even though we had a major trend change to the downside, we had plenty of time to get out. Okay, now let's say you had taken advantage of the buy setups. Well, had you not gotten out quickly, you most likely would have at least been stopped out by breaking even, because here was a sell setup right here, and just taking these sells, that's 100 pips in one day, or roughly $1,000 per contract. So as I stated, the market is always giving us signs about what it wants to do. The reason why we're not able to make money is because we don't listen to it. We're listening to some guy on TV or some guy in a chat room. Trust me, I did that myself. We didn't have chat rooms when I first started trading. We had newsletters. But I still didn't make a dime. And I was on the floor of the exchange. I had access to all this information, and I still couldn't make a dime. It wasn't until I started listening to the only thing I should be listening to, the most important thing, which is the market in front of you. That's when I started to become consistent. So this is what we try to instill in all of our members and students, not telling you what to trade, telling you how to trade, telling you what the perfect market or time frame is. And by all means, not trying to have you emulate how I trade. We try to give you the same information and then work with you to make it fit your parameters, your personality. Now, one of the best things about the PET-D is that you can also use it long term. Now, up until now, we've just showed you how to apply it really to tradable markets. What if we could just use this as a tool, an indicator tool, to tell us when to get in and out of our long-term positions, such as IRA accounts or things of that nature? Let's look at a monthly chart of the S&P 500 index. Here's the index of the S&P going all the way back to 1995, roughly a little over 20 years. And we see all the peaks and valleys of the index of the S&P 500 in that 20-year period. We see we went straight up until the dot-com crash in 2000, and then we fell out of bed. We had a really strong crash to the downside. And then we firmed up in 2003, went right back to the old highs until the banking financial crisis hit in 2007, 2008. Once again, another strong crash until we firmed up in 2009 and 10, and we've been going up ever since. Now, we've been having some very weak markets lately. The market, as we said, a couple of days was down over 1,000 points. We've had a couple of months that really closed down strongly. How do we know that we're making another top here, or we're not making another top? Are we just resting to make higher highs? Or are we actually topping out again, just the way we did with the dot-com crash and the banking crisis crash? Okay, well, a very easy way to find out, in our opinion, is by applying the PET-D. And now you see, once we apply the PET-D, what we're looking for are 3 consecutive bars of a different color. That tells us that the trend has changed. So as you see here, in 1995, going all the way up, we had majority of the bars green. Sure, we had 2 bars red here, but remember, we need to see 3 in order to tell us that the trend has changed. And we didn't get 3 bars until right here in late 2000. So you could have missed this entire crash by exiting and waiting for 3 consecutive green bars in 2003 and got back into the market until the banking crisis hit. And in 2007, well before the crash, we had 3 consecutive red bars. You could have exited your entire IRA account, your portfolio, and missed this debacle here going into 2009. In mid to late 2009, 3 more green bars. And so we're long once again. We're back in the market, whatever investment we want, whatever stocks, bonds, whatever we want. But as long as we know the market is going in our direction. And we have a couple of splashings here of 2 red bars, maybe 1, but we never had 3 consecutive red bars. Now we've had 2 lately. Is this month, February, which hasn't been that strong, is it going to conclude a red bar? Is it red right now? Wouldn't you like to know? If you have the pet D, you will know if we have 3 consecutive red bars and are possibly going into another long-term 3 to 5 year bear market. That's the beauty of this tool. It's so great because it just tells you, basically translates what the market wants to do, and so many times in advance. So let's recap. We share with you today a simple trading technique when applied with the pet D that pinpoints quick momentum moves in any direction and in any time frame. This is the 2-bar setup. It's the inside day pattern. Here's what we're offering all our people for attending today, all of our attendees. We're offering the pet D at a discounted price, okay? This is our roadmap for success. It's our roadmap for any market. It's the pet D stands for the Primo Early Trend Detector because we have, since I started using it over 35 years ago, we've changed it into a color bar algorithm. So we've renamed it. But basically, what comes in this course are the add-on, obviously, to change the color of the bars to the color red or the color green. We also give you 2 continuation trading techniques, 2 pullback trading techniques. This also comes with a trailing stop technique. And remember, you can apply this to any market, any strategy, or any time frame. So even if you don't have one of our strategies, or you're really confident with what you're trading right now, maybe you've devised your own strategy or you've purchased it somewhere else, that's okay. We really feel it will increase your odds for success or consistency by applying it and being in sync with the pet D. So let's say you have a strategy, let's say based on news, which we don't in any way teach at all at Specialist Trading. But let's say it's working okay for you. Well, once you apply this with the pet D, we really think it will increase your odds for success. And I think most important, lastly, is with our course, the pet D course, as with any of my courses, you have personal correspondence, lifetime correspondence with me. So you can always check in with me, you can email me, and you'll always be able to ask me any question you'd like for life, okay? This is not something that is only good for the next couple of weeks. This is for life. So you become a student of mine and I can answer any question that you may have. So this is our complete pet D course, probably one of our most popular and most consistent techniques that we have at Specialist Trading. And one thing I want to mention before we go, I know a lot of people are saying, well, you know, Steve, I kind of got it figured out and I know how to use this 2-bar pattern here. It's pretty easy. So why do I need the pet D? I mean, I know once we're in an uptrend and I'll just look for that 2-bar pattern and I should be successful. So I really don't think I need this. All right, well, here's a perfect example of why I think you should have the pet D, because it's not as simple as it appears. In this older chart of CRM, it's obvious to see that we're in some type of a downtrend, right? We're making lower lows and lower highs. So we're in a downtrend according to your observation. So you're looking for that 2-bar inside day pattern. And you find it right here. So you think, boy, we're going to make lower lows. I'm going to sell right here. And this is just basically what Steve taught. I don't need the pet D. I'm already in a downtrend, so I'm going to do okay. All right? So you sell, and look what happens, okay? Now you say, well, why? It didn't work out. If you had had the pet D, you would have simply applied it and seen that in order to sell there on that inside day pattern, you adequately identified an inside day pattern, but both bars need to be red. As you see, the second bar, bar number 2, is green. So that would have told you not to take that setup. So that's why we say it's so important to have the pet D. It's so fine-tuned to the trend, it will tell you whether you should be taking that valid setup or not. So you would not have taken that and entirely missed that setup and missed that losing sale. But more importantly, once you had consecutive green bars, look at all the setups you had that were valid that you could have taken advantage of. So trading with what you think is the trend would have lost you money here. Trading with the pet D would have kept you out of a losing trend and kept you in 2 profitable trades. That's how important the pet D is. Once again, this is one of our most popular and one of our most successful in terms of the testimonials we get back from our students. So here's our 2016 New Year special. We're starting out. We're actually discounting the price, okay? We're giving you 2 options here. You can either pay with a lump sum, which is discounted roughly about $500, or you can pay with a small deposit and then with a monthly fee. You can get the attendee discount of $14.95 down plus $97 per month, okay? You can do that as well, or you can get the lifetime access for $24.95. This is no payments. It's just one payment of $24.95, and it's yours to keep, okay? So, and you always have me as your personal instructor. So if you have any questions or if you are considering payment plans, here's how to take advantage of this. You want to contact Pro Trader Strategies. They're my sister site. They market and promote all of my courses and all of my techniques. You can email them at trading@protraderstrategies.com or call them directly to set up a payment plan at area code 310 598-6677. Now, the sign-up link is that link at the very bottom of this page, but that's not a live link, so you have to copy and paste that onto your browser. If you want to simply go to a live link, just go to the chat box on the far right. I believe ProTrader Strategies has already pasted the live link there, and that will automatically take you to the sign-up page or give you more information about what we're offering you today. But it's a great discount. The Pet D was originally at $29.95. We've discounted that down to $24.95. Also, you can also pay for a smaller sum at $14.97 and then with just $97 per month. Okay, so I'm going to leave this information here for all of the people that are interested, and I'm going to open up the question and answer box for people that have held off on asking any questions. And thanks for waiting, I appreciate it. But the presentation, I gave you so much information and energy involved, and I don't want to slow down just the flow of the presentation by taking questions every 2 or 3 seconds, okay? Randy asks, does this work with commodities such as corn or cocoa? Yes, it does, Randy. In fact, I gave a presentation about a couple of months ago using, I believe, cotton and even coffee with the Pet D. And so it works just as well. It doesn't really matter what market. Now, honestly, I don't trade the commodities. There was a time about 10 years ago I did. I traded a lot of commodities and it worked great, but I pretty much phased out of commodity trading. And it doesn't make any difference, though. We have a number of students who do trade commodities who use it on different markets, and they say it works fine. Okay, so if you're interested in trading commodities, it can transfer over just as well. Richard is asking, why are some bars solid colors and some are outlined? Well, Richard, the reason why we do that, the outline bars are basically up days. In other words, when you see an up day, the bar will be colored white or it will be blank inside, but the outline tells you if you're in an uptrend or a downtrend. So just because you have an up day doesn't mean you're in an uptrend. Okay, uptrend is in a downtrend. You take into account a number of bars, based on the momentum. So you can have 2 or 3 up days, and as you saw, I believe with that example with Monster, MNST, you had 2 up days. And the bars were both colored outlined red. So that was telling you that on a daily basis, you were still in a downtrend. Now, once we went to a smaller time frame, a 15-minute time frame, all of the bars were green. That's why I say only trade the chart you're looking at. Now, if you don't like to use candlesticks and you like to use standard open, close, high, low bars, that's fine. Those bars will turn red and green as well. I've just had some feedback from people who have watched the presentations over GoToWebinar. They said they can't really see the colors that well when I just use the standard open, high, low, close bar. So we've, for this presentation, we've changed them to a candlestick. But it doesn't matter what type of bar you use, okay? The Pet D indicator is available to members. Yes, it is available, and a lot of people always want to know what charting packages it works on. It works with MT4. Okay, you may want to write this down: MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and thinkorswim users can use the live stock data that comes with thinkorswim, and they can run that data free on a free NinjaTrader platform. Okay, so in other words, because of the way thinkorswim is set up, they don't allow us to have the Pet D on there. So what we do is we just use the data, which you can be running thinkorswim at the same time with a NinjaTrader. Just do a hookup to that data, and with the NinjaTrader platform, which is totally free, which we help you set up through our tech support system, you'll be able to see the Pet D and all the different setups and things of that nature. So that's the only alteration. But a lot of people love that because we have such a great tech support department. They do it for you for free, and there's no problem at all in setting it up for you. Okay. Once again, if you had difficulty seeing or hearing this presentation, contact ProTrader Strategies, and they will send you a link to the recording. Alan asks, how does the Pet D notify you on the charts? Well, the Pet D is a color bar algorithm, Alan, so it doesn't notify you in terms of giving you a bell or alarm, because that's what systems and strategies do. Remember, this is not a system. It's not a strategy. It's just a trend identifier. So it's telling you what the trend is, and the way it notifies you is by the color of the bar. So if you have 2 or 3 consecutive green bars, it's notifying you that you're in an uptrend. So you shouldn't be selling in an uptrend. I mean, that's like swimming upstream. Why would you do that? And conversely, if you have 2 or 3 red bars, it's telling you you're in a downtrend. So you don't want to be buying in a downtrend. I can't think of a better tool to keep you out of trouble, okay? Because you're in sync with what the market wants to do, okay? Let's see. So we told you the platforms. Saying, is this web-based or software you need on your desktop? Oh, this is simply, the PETD is something that you add on to your chart. So whatever trading platform you're using, we simply send you the add-on which you upload to your charts, and it comes on your charts, whatever you're using. So it's not something separate that you have to look online or get a separate platform for, okay? PETD, is it like the Heiken Ashi candles? You know, Tony, I don't use them, and I've really never, I've experimented with them a little, but all I can tell you is, you know, some people have said they're similar, but there are differences. In my opinion, I think the PETD is the best thing I have ever seen in my nearly 40 years of trading that is that fine-tuned to finding out what the trend is. So I really don't look for anything else to find out what it is. And remember, once again, the secret to the PET-D is not the formula, is not in trying to figure out what it is. The secret to the PET-D is the mentoring that comes with the course that I supply and showing you how to apply it. Because I guarantee, if for some reason you had access to the color bars, but you didn't know how to use it, you would lose money. You wouldn't have any idea how to use it. You'd use it for picking tops and bottoms. You try to outguess it, and you'd most likely wind up throwing it out the window thinking it doesn't work. That's because most people don't know how to apply it. In my 35 years, I've been using it almost on a daily basis consistently, and that's really helped sustain me for that entire time. So this is what I teach you in the courses, okay? Shakir asks, you say that 3 consecutive PET-D bars of a different color indicate a trend change. Well, this is just one way, Shakir. First of all, that's not written in stone. That's just a very basic format of finding out, okay? Some of our members say, listen, I just wait for 1 bar, you know, and others say, no, I like to see 5, maybe 10 bars. It's up to you. So I don't want you to think that that's the standard rule set in stone. That's just a rule of thumb. So when we say 3 bars, we're just trying to be very conservative, okay? So when you ask, is this the same for all charts, whether they're 1 minute or monthly? Once again, it's up to you. This is what we encourage. Once again, if you look at all of what we teach and all the techniques as a system, then that means that everything must be applied the same way. So it must be the same way for 1 minute charts. It must be the same way for monthly charts. No, it's up to you to decide that. Some of our members say, you know what, Steve? I like to see at least 10 bars. That's fine. There's nothing wrong with that. Others say, you know what, Steve? The first green bar, I'm off to the races. I'm looking for buy setups. That's fine. There's nothing wrong with that. The only thing wrong is if you're trading something that doesn't feel comfortable to you. So in other words, there is no right or wrong answer. You have to decide. I think the very first opening sentence I said is the reason why most traders fail is because you're taking your cue on how to trade from someone or something, okay? That's not the way we do things as specialist trading. We give you the information, we work with you and show you how to apply it, but we want you to apply it to make you feel comfortable. So if you like to take a setup after 1 bar, fine, if it makes you feel comfortable. If you like to wait 10 bars, that's fine. There is no set rule in any of our strategies or techniques, okay? They're just very highly consistent techniques. Edward is asking, is the upgrade available to me? I became a member in January. Hi, Edward. I would say contact Pro Trader Strategies. I'm sure they're always happy to work with you. I'm just the educational portion of the company, and Pro Trader Strategies handles all that, and I'm sure they can work with you and make you very happy with that, okay? Let's see, Mike asks, does the PET-D package include software that enables the computer to produce the green-red colors? Well, yes, we give you the add-on, but it depends on what platform you have, okay, Mike? So I stated those platforms. Let me just say them again for all of you who didn't hear possibly. They're the most major platforms, which are MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim. But you just have to alter the data with Thinkorswim to be applied on NinjaTrader. But we set that all up for you. So there's actually no work on your part. We do that all for you, okay? Mercy asks, hello Mercy. Mercy is a student of ours, says, I'm not familiar in trading the stocks. Can you please explain what the value of each point? Well, basically, a point is just, it's like 100 ticks. So in other words, 1 plus, let's say you're looking at a stock is at 50. 50.01 is 1 tick. 50.02 is 2 ticks, okay? When you get to basically 100, then you go to 51 and you start the process all over. I would probably just do a Google search for asking that, so don't take a lot of time on this, but it's very standard. It's very basic. Let's see. Also, people are asking, if you use the PET-D, do you need to use the 50-period simple moving average? Once again, just like I answered Shakir, it's up to you. Now, I personally, when I use the PET-D, I use it in conjunction with the 50-period moving average, okay? Now, is that a rule set in stone? No. Some of our students say, no, Steve, I just like to use the PET-D. That's all I need to know. Is one wrong and the other right? Absolutely not. The only wrong thing is when you're trading something that someone tells you to trade, okay? And someone tells you how you should trade it. That's what's wrong, because that's why most traders fail. We just want to give you this information, show you a lot of different variations, a lot of different ways, and then you decide how you best want to apply it, okay? Edward's asking, why are some red and green bars hollow and not filled in and not changing? Remember, Edward, that the reason is so you can see the color of the PET-D. For some reason in the West, I think this happened roughly around the 90s because people weren't able to really understand how candlesticks worked. So a lot of platforms started coloring down days red and up days green, just so that we could know. But they, when I first started studying candlesticks, 50 years ago, candlesticks were always called dark bodies, or they were black. And up days were just hollow bodies, meaning they were white or just the background. So that's really the standard. We're using candlesticks in the standard traditional way. Now, once you add the PET-D, you can see whether that up or down day is in a downtrend or an uptrend. But please know that, in Japanese, true traditional Japanese candlestick trading, the down days are not red and the up days are not green. That was just something that was done in the West for people to understand what they meant. But down days were always colored dark black, and up days were always clear or hollow body, meaning they were white. And that's the way we use them in our setups, and that's how you can tell if the PET-D is in an uptrend or a downtrend, okay? Nick is asking, on average, how accurate is the PET-D? Well, remember, you can only ask that question if it's a system or a strategy. That's like saying, how accurate is a moving average? Used in what capacity? There's a million different ways to use it, okay? Different time frames. So all we're trying to tell you is that the PET-D is just getting you in sync with the trend. Now, a lot of people have a lot of problems with whipsaw markets and ranging markets, and that's true. You should be, because that's where most people lose money and most people get whipsawed. But the beauty of the PET-D is that if you're using the PET-D with a ranging market, you will have maybe one red bar followed by one green bar, two red bars, two green bars, because you're going back and forth, up and down. So when you see markets like that, that's basically the PET-D telling you that there's no direction. Okay, so that's keeping you out of a lot of trouble many times. Whereas oftentimes you'll be sitting there buying and then it goes down, so you get out and you sell and it goes back up. But the PET-D, when you see bars transferring from red to green, that's basically the PET-D is translating that as you're in a ranging market, probably best not to do anything. Okay. Let's see. And where can I get your PET-D? I have not got them in any of my trading terminal. Well, once again, I would contact ProTrader Strategies. They can help you set it up with whatever type of terminal you have, or give you great suggestions to get free terminals. It's up to you. But remember, ProTrader Strategies handles all of that, the tech support and being able to help you with that issue. So I would contact them. And also, they also help you with prices and discounts. They can put together payment plans or help you get that small down payment and then a monthly plan as well. Okay. Steve says, can you give us a little bit more detail about the course? Well, the course is an online course, so it's not something you have to attend, because we found that when we have courses that people attend, it's very difficult for everyone to attend at the same time. A lot of people work, people have different hours. We have our courses are taught in over 100 countries around the world and in every state in the United States, so it's difficult to line everybody up at the same time. So what we do is we made everything online, so you can watch it at your own leisure. You can watch it on the weekends, in your lunch hour, after work, whenever you'd like. Everything was recorded, and you can watch it whenever you want. And it basically comes with different techniques, such as I showed you today, for entering with the Pet D, and different techniques for using it as a stop placement as well. And different ways to trade, different examples. Comes with tons of examples, just like I showed you. I believe it's four separate videos, but you have to check back with Pro Trader Strategies. And then on top of that, you also have lifetime correspondence with me. So you get my personal email address, you can always contact me, okay? So that's basically what the course is. Don't feel that you have to be there every Saturday or every Wednesday at 5 p.m. because there's just too many people around the world. The Pet D is traded by hedge funds. It's also traded by people who just started trading months ago. So we can't get everybody together at the same time. So what we try to do is just make it easily accessible for you through a video that you can watch that is an online link, and you can watch it whenever you'd like, okay? Let's see. Don asks, is mentoring in the form of your students calling you on the phone and asking questions? Well, when we say mentoring, it's basically the correspondence you have. Now, we do have different types of mentoring. Well, yes, you are able to speak to me on the phone, but that's at a different price level because, as you see here, I'm giving sometimes 2, maybe even 3 webinars a day. I'm also putting together courses, and I'm also trying to trade at the same time, so my time is rather limited. But if you do become a part of the higher price mentoring program, yes, you are able to speak to me over the phone. But mostly everything is answered through emails. In fact, I was answering emails right before we began today's presentation. Okay. Nick asked, does the Pet D ever have to be updated? This is a great question. In my nearly 40 years, we've never updated the Pet D except for once. And all we've done is we've given you a different option. We have 2 different options, the Pet D Fast and the Pet D Slow. And that is not really an upgrade. It's just a separate way of using the Pet D. A lot of people like to stay in the Pet D a lot longer for those long-term trends. Therefore, we suggest the Pet D Slow. Okay, it doesn't mean you have to use it, but that will help you with the tools and techniques we teach you. A lot of people just want to use the Pet D for short-term trading. Well, then we suggest the regular or Pet D Fast. But there's no upgrade. There's never been an upgrade. It's not like after a couple of years we say, well, the Pet D is not working right, so we have to alter it and change it, go back and filter it a little bit to make it work again. We've never done that, and I wouldn't do that, okay? So the same thing that you're getting, if you become a member of the Pet D course today, you're getting the same thing I've been using for nearly 40 years. Nothing has changed, okay? All right. Lastly, Sam asks, for scalping, do you use the Pet D Fast? Yes. So in other words, if you were scalping, I would suggest using the Fast Pet D. But it's up to you. Once again, I'm not going to tell a trader how to trade because that would be just as similar to me saying, this is how you're going to lose money. It goes against our philosophy. We don't believe in chat rooms or trading rooms telling people what to do because that's why most traders fail. We want to give you all the information that has stood the test of time, the same things that were able to sustain my trading, and then let you decide through my mentoring what works best for you, how to best apply it. Some like to use only the Pet D Slow. Others like to use the regular Pet D. Others only like to use it for day trading. Others like to use it for IRA trading for their long-term accounts. There's no wrong or right answer. The only wrong or right answer is when you are out of sync and when you're trying to mimic someone else or trying to take your cues from someone else. The last thing I can close here as we go into closing, the last thing I can say is that the most important thing is for you to only focus on what's coming from the screen in front of you. Don't take any information from an outside source, be it some guy on TV, be it some chat room, or be it even from some guy in a webinar. Take it from the chart in front of you. That's it. You don't have to look at multiple time frames. You can if you want to, but you don't have to. You don't have to look at multiple news sources. You can if you want to, but there's no reason to. Just look at the information on the chart, and that's what sustained me for nearly 40 years, okay? All right, as we close up here, I want to thank you so much for attending today, and I really hope you take advantage of this great a brand new 2016 year and get involved with the Pet D course. It is by far one of our most popular courses at Specialist Trading. There's talk that we may go into leasing this in the future. So if you don't want to wait, and if you want to lock into a nice secure price right now, you can do that, as well as some payment plans as well. So contact Pro Trader Strategies, see how they can help you set up the Pet D course with a payment plan on your particular software, and you can be up and running as soon as possible, okay? In closing, I want to thank you so much for attending, and I wish you the best of luck trading, and I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.